Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, the gold prices surged to a record high driven by safe haven demand amid concerns over U.S. President Donald Trump's tariff plans. Additional support poured in from inflows into the world's top gold-backed ETFs. Prices of the yellow metal have surged nearly 45% in just 12 months. Silver is not far behind. The precious metal hit a three-week highs in this week on the back of heightened inflationary pressures and existing tariffs on Chinese imports and metals. So what's in store for gold and silver prices from here? Should you be investing, and to what tune and what quantity? To discuss all of that, we are now joined by Michael DiRienzo. He's President and CEO at Silver Institute. Thank you, Michael, for joining us. And it's a morning for you right now, so good morning to you. What is your sense, first of all, on the tariffs, really? Because silver, while of course is a precious metal, it also is an industrial metal. And with the kind of tariffs that we keep hearing about, how are you looking at impact of that on silver?
Well, thank you again, Manisha. It's always an honor to be on your show. Look, at the way we see the market today and how tariffs could potentially affect the global silver market is really the question of the day. And many analysts are working to figure out how this would impact. What we're seeing directly is we're seeing flows of silver in mass quantities from London to the CME here in New York. We're also hearing that there's so much silver and gold coming into New York that a lot of it was shipped to Canada and is in the water between Canada and New York, waiting to get into New York City. So since the election and right after the election, then President-elect Trump made assertions that there will be tariffs, there will be blanket tariffs, and that would affect our producing companies in Mexico, Canada, and the United States, not to mention those refining companies in the United States that takes in doré from both Canada and Mexico to be refined. So it potentially could have an impact.
Oh, well, absolutely. Michael, since you touched upon that topic, is there any number available on how much silver has been imported into U.S. until now? And do you see this as a one-off, or do you see a change in pattern here?
You're seeing numbers that are very similar to what we saw during COVID. Okay, so we're just below the COVID numbers. I've seen anywhere between 380, 390 million ounces of silver that have come in. But when you go back to the COVID days, it was about 400, 404. So we're bunching up against that right now.
And also, would you say that this is an aberration? I mean, markets are readying themselves for tariffs. If the tariffs do not come, do you see all of this gold and silver then coming back into its original markets?
I don't know. That's a question for the bankers and those that acquire the silver to determine. But I will say this. It has clearly affected investor sentiment, right? Because on the industrial side for silver, could it potentially have an impact? We argue no. We argue that the silver industrial demand is going to have a record year. And on the gold side, you know, they're bunching up on record numbers, prices for gold.
Well, absolutely. Michael, what's your sense really on the industrial demand itself? I mean, this is going to be a fourth, fifth year that we'll be looking at a record demand. And where do you see this demand coming from? What sectors and what geographies?
Oh, that's a great question. So the industrial demand, we do forecast over 700 million ounces of silver, which would be another record for silver industrial demand. We think that will really be paved by the electronic and electrical sector. So, for example, silver's use in photovoltaics, which is continuing to grow, will set another record for that demand center in 2025. But also in consumer electronics and so forth, you're seeing a lot of demand in the whole electronic space, including electric vehicles, charging stations, and the infrastructure surrounding EVs.
And what geographies do you see this demand coming in from?
We think India is going to have strong demand this year, apart on the industrial side, clearly on the investment side. We think the United States and most of Europe as well. Our question is how will the Chinese economy react to these tariffs, and how will the Chinese economy react overall, and what impact could that have on precious metals?
Oh, well, absolutely. Michael, the other thing really is about the overall demand. When you look at the Indian markets, I mean, we're looking at almost 100,000 rupees per kg of silver here. So even as the international markets are far away from its all-time highs, the Indian markets are there, and yet there again. How are you looking at the buying pattern here? Because while we've seen investment demand strong, we've perhaps seen the jewelry demand stronger as well. But the whole demand for articles, artifacts is something that has constantly declined.
Well, I mean, if you just take January, for example, last month, so over 28 million ounces was imported into India, mostly from China. But that's a 36% year-on-year increase. A lot of that was targeted towards your growing ETF sector, all right? And so the import strength is mainly investment related at this point. And we're hearing that jewelry and silverware demand might be somewhat subdued. But as you know, those are two very price sensitive categories.
They are, yes. Michael, also, what's your sense on prices going forward? Because when we started this year, most people thought that we would be going much higher. Even now, when I speak to a lot of experts and banks, they believe that silver could outperform gold, especially given the fact that the gold and silver ratio also is quite supportive of silver buying.
Well, the prices have been interesting so far this year, right, Manisha? We're up 12 to 15%, depending on what region you're in. I leave it to the experts to make a price prediction. So if you look at what Goldman Sachs says, you know, $35 a year, Citibank, anywhere between 30 and 32 as an average. The LBMA forecasting survey had price ranges as high as $47 for an average. So look at it's anybody's guess. We think that the market is ripe, though, for further growth to build on the great results we had in 2024. And we think that investors will start moving into silver more throughout the year.
Michael also talked to us about the global deficit that we are seeing this time around. And as a couple of months pass by, what is your sense now on demand and supply for this year? And what kind of a deficit are you working with?
So we think that overall global supply is going to mine supply is going to increase only because of some new projects coming online, mostly in Mexico. But we believe that we will be in a deficit again this year. This will be the 5th consecutive year. We think that the deficit will be smaller than last year, but at 150 million ounces, that's still quite significant.
And that does tell you that the prices will perhaps be supportive, and the gold and silver ratio does tell you that the silver buying perhaps is quite lucrative. Michael, thank you as always for joining in and making sense of what silver markets really are doing in sense of prices, demand, and of course supplies. Well, with that, it's time for a short break, but don't go anywhere. This discussion continues on the other side.